Hello and welcome to India Market Close. It's the last hour of trade and it's turned out to be quite an exciting one with a flat to slightly lower start is where we started today's day of trade. But pretty much at the day's high point as we see it comfortably about 22,100. 22,175 is what we have in kissing distance of 22,200. 170 points odd added to the index despite very weak global cues that we had this morning. So we were lacking triggers, we were lacking direction, but interestingly, the bulls have actually taken advantage of the opportunity and managed to pull the Nifty trend in their favor. Bank Nifty continues its underperformance, so no major contribution coming in from Bank Nifty. 0.3% higher on Bank Nifty. 46,733 is what we have. Well, the good news is that the broader markets are performing in line with the benchmark index. What we saw yesterday was largely the large cap index was underperforming the broader markets, and especially the mid cap space. This afternoon, though, the mid cap and the small cap index in line with the large cap space. A quick check on how the breadth of the market's doing. I'm guessing that's improved substantially, but it is the small cap space that's leading from the front with the percent gains coming in on the small cap index. The breadth of the market is very clearly in favor of the advancing stocks. So the gainers outspacing the losers in today's day of trade. Largely, the equation has, remember, changed in the second half of trade. The first half of trade, the buy still was on the losing side. Well, that's how the market looks. RIL carries, or rather takes a lot of credit for helping the Nifty scale to levels closer to 22,200. So breaking that momentum was really the leadership coming in from RIL, which went up 4% on the back of a brokerage upgrade. Auto was having a pretty pleasant day. Adani Port is doing quite well. Remember, they've had 100% clearance coming in for their ports, so 2.5% on Adani Ports. The Bajaj Twins looking good. Some of your banks are having a pleasant day as well. Your insurance companies, IT, not looking too bad. On the sell side, SBI is down about 1.5%. LTI continues to be under pressure in the last couple of weeks. It's really not one of the big IT boys, but the pressure coming through on back of that merger that they're still struggling with and senior level exits that we've seen for LTI Mindtree. Apollo Hospital, Tata Consumers, Britannia, Tech Mahindra and Infi are also all trading flat. But the afternoon, Alex, largely belongs to Reliance Industries, and that single-handedly, I think, helped the Nifty break out of that funk that it was in.
Absolutely, 3.8%. We're going to talk about some of the reasons why it is moving higher as well. Let me take you through a few of the stocks from the broader markets as well. And arguably, if we're talking about Reliance Industries from the large cap, ABB India is another stock that is doing incredibly well. And that's on the back of an upgrade from UBS. We'll be talking about that in more detail as well. But they have retained their buy rating, but they've upgraded their target price. Potential upside as of yesterday's close of 21%. Some of that being reflected in the stock price right now. Maruti Suzuki, Samina briefly mentioned this, but this is a stock now that has been on a tear. It has crossed the 4 lakh crore in market capitalization for the first time ever, becoming the first auto stock to do so. And it is up as much as 2.5% in trade right now. Aster DM Healthcare, very large trade taking place in this particular counter, close to 10% stake exchanging hands in 2 bulk deals that took place earlier today, down about 7.3% or thereabouts. It was sold at a price of 410 rupees, and the stock price is not too far away from that mark right now. Angel One is another that we're talking about. Fundraise has been taking place. The QIP had a floor price, remember, 2,555 rupees. It is completed, I believe. It was concluded on the 26th. No, that is Wockhardt. Sorry, that's the next stock. But more than 8.5% on Angel One. Wockhardt is up as much as 5%. That, by the way, is an upper circuit. It has raised as much as 480 crore rupees via QIP. And finally, CDSL, which is down about 4%, a large trade here as well. 5% is where it is at right now. And this is likely a trade that was conducted by Standard Chartered today. It was at a discount of about 6.5% to yesterday's closing price. So quite a lot of large trades taking place, Samina, and fundraising as well. You were speaking about at the open today.
Indeed, I think Alex, the flavor of the market has been block and fundraising, and we've seen that in trade today from your Aster DM to CDSL to Angel One to Wockhardt. It's been a flurry of QIPs and block deals, and let's not forget that the primary markets have been as action-packed in the last couple of months. Well, and it's about brokerages. So stocks like ABB, Reliance Industries getting a leg up on back of brokerage calls. We've got Jay Bala now joining us with a technical view on the markets. Jay, hi, it's Samina. How do you feel about the markets right now? We've broken out of a funk, all thanks to the way Reliance Industry has managed to pull up the index up 3%. What's the trade on RIL?
Yeah, good to be here, Samina. The fact that RIL is about 29.50, that's an important point for me. But I'll be a bit cautious on RIL. I'm not 100% sure that it will take out the all-time high. My objective was 30.50. It had come down from 30.25 and went below significant support at 28.40. But after that, it's come up to about 29.50. So that's a positive for the bulls. But, it's going up on much lower momentum. So if it were to clock fresh all-time highs, I don't know if it will sustain. I have doubts and I am suspicious about it sustaining. So I won't allocate incremental capital to RIL at the moment. But if you're already holding, hold the stop loss at 28.25.
Right. Jay, and taking that as a cue, what's the call on the Nifty? Close to 22,000 currently. Would you initiate a long or short strategy?
Yeah, 22 to 200 is a very important resistance. So, I think the high at 22,500, I think that's likely to hold for some time now. But from a slightly higher time frame, as long as the index can hold about 21,830, I think the bulls are a bit safe. But if 21,830 were to get broken, that will be the point of caution where you need to fold. So, right at the moment, I'm very neutral on the Nifty because I'm anticipating a breakdown to come through. So, but the significant supports have not been taken out. So, the existing trend prevails. So, I would, be, if you're bullish, but be on the edge.
On the edge. Do stay with us, Jeff. I just want to take a check on why Reliance Industries is buzzing, and it's up and about, as we've already pointed out. Goldman Sachs seems to be bullish on the company, and that seems to be one of the reasons why the stock is up and about in trade today. Agam is joining in to give you some perspective on what Goldman Sachs is talking about. Agam, what is the target? Have they changed anything with regard to the rating?
Sure. So they maintain the buy rating with a price target of around 3,400 rupees per share, about 400 rupees higher from current market levels. The reason why they're positive on Reliance Industries is firstly because they expect the return on cash invested to improve by 270 basis points to around 12% by FY27. Moreover, they suggest that, they're reaching the end of their capex cycle. In fact, the capex is expected to fall sequentially as well. And consequently, its EBITDA could see a 17% CAGR between FY24 through FY27. Moreover, Reliance tends to outperform during expending returns. That's what Goldman Sachs is saying. And they expect valuation discovery via stake sale in newer businesses. This is something which has also been on the anvil of late. And a lot of investors are talking about the potential listing of several of its businesses. As we all know, Reliance Industries is not just one, but about 4 to 5 businesses roll into one. And these are some of the factors which are potentially playing in favor of Reliance Industries today.
Speaking of entities in that Reliance Industries group, and Jio Financial Services is something that I've been looking at over the last several weeks. And if you can pull up the year-to-date chart just of 2024, it is up at this juncture about 50%. Jay, anything that you're reading on the charts? I know it's not a lot of data to go by, but anything that's suggesting that the upside potential is there even at this stage?
I'm slightly more positive on Jio than on Reliance. I think the move that fell short of 380, and it looks like an unfinished move for me. But as long as the stock can sustain about 318, I think there's at least one further higher highs to come through closer to 400. So slightly more positive on Jio Financial than on Reliance.
Right. Jay, what are your picks? Anything on the short side that you like, that you'd initiate right now?
I'm actually bullish on OMC names. I have a couple, both the OMCs, BPCL and HPCL. I'm bullish on them. And, the recent drop, both these PSUs saw, it looks like a completed correction. So, the recent low of 550 for BPCL, I think that will get protected. And the recent low of HPCL of 440, I think that will also get protected. So those will be the stocks for me. I'm expecting BPCL to touch 702, and HPCL to touch about 610. But these are PSU names. The government can change their mind on a whim, so your allocation has to be lower than usual, but bullish on it.
Speaking of oil marketing companies and the underlying, of course, not the underlying, but the commodity is crude oil. Brent crude, Jay, is something that we've been looking at very closely. It's come off the recent high of $87 to the barrel. I'm looking at the screen right now. It's close to, $85. Are you looking at the charts? Is there anything to indicate that there is potential upside? Some people have pegged it at, close to $95 in the near term. Is that something you're looking at as well?
Absolutely, Alex. And I had tweeted on the 1st of March that, both the varieties of Brent are breaking out of an inverted head and shoulders pattern. So I have an objective of about $96 for Brent. So in the very short term, say today, tomorrow, I think I'm expecting a short-term drop for NYMEX to touch about 79.5 and then proceed to the next powerful leg. That'll take Brent to about 86, 88, and NYMEX to about $2, $3 short of that.
Jay, I want to go back to some of these movers in today's trade. RIL we've already talked about, but what are you making of Maruti and Bajaj Auto? Between the two auto majors, is there a trade on either of them?
We had discussed Maruti last week, Samina, and I was bullish on it. And I said my objective for Maruti is about 13,000. And the reason for that is, the stock is going to get tailwind from the yen weakness. Yen today printed a 30-year high, and it's not done. And I'm expecting yen to touch about 164 to 177 in the medium term. So, if nothing else changes, all things being equal, I think Maruti should gain much more tailwind from the yen's weakness. And when it comes to Bajaj, I've been bullish on TVS, Bajaj, and Hero Motors from the late September of last year. But Bajaj, is likely to finish higher, somewhere about 9,600. So I won't allocate incremental capital here, but I will trail my existing positions with about 8,300 as stop.
Bajaj, let's also talk about the Bajaj twins and pull up Bajaj Finance, and if we can pull up the last 5 days, not the last 6 months, but it's up about 1.8%, and just the last 5 days it's up about 6%. So what a breakout that you've seen just over the last week or so. What are the indicators telling you about this counter, Jay? What is the upside potential?
Yeah, see, Bajaj FinServ is actually slightly weaker, so it's more an avoid. And in February I was negative on Bajaj Finance. It broke down from where it is right now and went much deeper. So it's possibly completed a correction, but 70-40 to 70-50 is a very significant resistance for it, which is the former breakdown level. So it can face resistance there. If it manages to take out that level, I think the next upside comes to about 7,400 for Bajaj Finance. But the medium-term structure is quite weak for Bajaj Finance. But what we are seeing right now is just short-term positive. I won't get overly bullish. I'll keep this as a trading bet rather than an investment bet.
Right. Jay, stay with us. It's turning out to be a pretty pleasant afternoon for this trade. It's the last financial trading day of the year tomorrow, so the market's going in or closing the year with pretty much of a bang from the look of it. We'll take a quick break, but before that, we caught up with Kenneth Andrade earlier in the day. He's the CIO at Oldbridge MF on his top sector bets. Listen in.
As we continue to grow, we have to take market share from the rest of the world. Now, you have to go and figure out companies that will build their franchise in the rest of the world. That's one element of all of it. We've seen how much wealth IT has got created. We've seen the dominance of Indian pharmaceutical businesses in the West. We've seen how Indian chemical companies have gone out and made their mark. And from there, you will see multiple number of more businesses. I mean, we are the second largest steel manufacturers in the world right now, and we're growing capacity out there. So all of this is coming together quite nicely. Now, pick your franchise out there, and this is the large trend that is playing out. Domestically, infra businesses and utilities, I mean, they are expanding at or at least the numbers that if you put the numbers together, it's going to be a scale business that is out there. Now, in that scale business, you've got to allocate your capital to parts of the value chain where you feel comfortable with and where you think the returns will be, I won't say it's back-ended, but which will to have a large extent an outlier return, the return of that. So these are the two pockets that are there. The third pocket, which is the consumer economy, I think that will come back. It might have a shorter cycle than the last time, but whenever it does come back, you've got to be a little ready for some of those businesses. Now, case in point is if you look at all the QSR businesses, they're going through a massive expansion in number of stores or in capacity, not numbers, so in capacity. But the market cap has gone just one way, which is down. So look for these trends, look for a bottoming out of the entire cycle, and just work your way around it. So the first two are my priorities. The second one is essentially, the third one is essentially something that we're waiting and watching for.
Welcome back. You're watching India Market Close. It's turning out to be a pleasant afternoon for the bulls on the street. It's the second last day of trade for the year, and the bulls clearly trying to take Nifty to levels of 22,000. For now, up about 0.7%. The broader markets once again outperforming the benchmark. In some interesting news flow that's come in, Daiwa Securities, we believe, is expected to acquire minority stake in Ambit. Ashok Wadhwa, Group CEO of Ambit, joins in. Hi, Mr. Wadhwa. Thank you very much for joining us. To begin with, you want to walk us through this recent development? What is the intent of Daiwa picking up minority stake? What is the valuations coming at? What are the plans that both you entities have in mind? Is it largely for a global client base? Is it going to be more local? Walk us through it.
So, last year, about July of 2023, Daiwa had acquired 18% ownership in the holding company, which is Ambit Private Limited. That's the merchant banking license, and that's the broad services franchise of Ambit. The holding company also owns a subsidiary called Ambit Finvest Private Limited, which is our lending arm, SME lending, largely secured SME lending. With this transaction that we signed yesterday, and which is of course subject to customary CPs, Daiwa will acquire 15% ownership now directly in the lending business. So they have now 18% in the holding company and they'll own 15% directly in the lending business. And the idea is that at a time when we think that the lending business has phenomenal potential, particularly the secured element, which is the dominant part of Ambit Finvest Private Limited, we think additional capital augurs well for the future of the business. Reserve Bank has been kind of giving directions to say, guys, go raise more capital, and to get a large strategic investor like Daiwa from Japan, where we're seeing already significant amount of interest in India, I think augurs very well for our business. It provides us capital that then gives us the confidence to go out and build the business as aggressively as the opportunity offers at this point of time.
So that's interesting to find out, and we'd love to touch base down the line to see how that pans out as well. But while we're speaking to you, I just want some perspective on how you're seeing the space, the lending space for NBFCs. We've seen regulatory action and the RBI uncharacteristically cracking the whip in certain specific incidents. What do you make of the latest developments, and what does that mean? What are the implications for the lending space as a whole?
I think our regulators, both RBI and SEBI, generally are a little worried about unsecured lending, particularly unsecured lending for consumer purposes. And there's growing concern whether all of this growth in the lending, the retail lending, is going exactly for the purpose for which the money is being borrowed, or whether a part of it is getting fueled into the markets, which is perhaps what the concern that our regulator SEBI has in a sense shared with us. My own view is that on the asset side, there is a huge opportunity. I mean, there's a very large population in tier 2, tier 3 cities that are now yearning to get into the formal borrowing capacity, and at the same time, there is clearly more capital that needs to be raised by NBFCs. RBI's diktat is focused largely on one segment, unsecured consumer lending. They have been otherwise very encouraging of secured lending and lending which is for business purposes, i.e. the classic SME lending with a security. So I would like to believe that those of us who are focusing on the secured piece, and particularly are lending for business purposes, continue to have a phenomenal opportunity to grow the balance sheet, and which is why perhaps long-term strategic capital will play an important role in trying to capitalize upon that opportunity at this point of time.
So Vatva, share with us the financials of the deal with Daiwa, and also where is the expansion going to take place? You are at a cusp of a breakout in some sense, and you're in an industry that's only growing from strength to strength. In that context, where is the money that Daiwa is going to be investing going to be used?
We all came out of a very difficult phase during COVID at a point of time when the focus was really on protecting your balance sheet versus going out and growing your balance sheet. All of us had kind of retracted a little from wanting to grow because, collections were under pressure during that COVID period. Post-COVID, we've seen a significant demand, particularly from tier 2, 3 cities. And we think therein lies the big opportunity. Granular growth, classic 15 to 25 lakh loan amounts in tier 2, tier 3 cities. And as I said, largely on the secure part. That's where the real focus is. The capital that Daiwa is going to invest in Ambit, it's about 420 crores coming in from Daiwa and 260 odd crores coming in from existing investors. So in all, we are raising primary capital of almost 670, 680 crores. All of that is going to strengthen the balance sheet and allow us to go out and capitalize upon this opportunity, i.e. secured lending in tier 2, tier 3 cities.
Thanks so much for joining in and giving us that perspective, and wish you all the best in what you've planned out.
Thank you.
All right, let's talk about some of the stocks and sectors, in fact, that are in the focus today. We've got IT that is underperforming in an otherwise sanguine marketplace, if you can call it that, this afternoon. It's down about 1/3%. And Samina pointed out just about an hour back some of those underperformers. If you pull up the screen on the quilt of the Nifty 50, you will see at the bottom of the list you have the likes of LTI, Mindtree, as well as some of the other large IT names. We've still got Jay Bala with us. Jay, TCS, Infi underperforming, LTI, Mindtree as well underperforming in trade today. What's your view on IT in the near term?
See, I've been pointing out that ever since TCS had clocked a fresh 52-week high at about 42 or 50, that the movement has been suspect for the sector. And, we've had two gap downs for the Nifty IT index in March. And I pointed out that 36,200 was a point where it marked the weakness for the sector. And if it were to take out 34,200, I think this will complete the corrective ascent that started from about 26,000 in late last year or middle of last year. So, 34,200 is a very important support for the sector. I've always believed that this movement for the frontline IT names has been, a corrective move rather than a start of a new trend. But I've been bullish on the mid-cap names like Persistent, KPIT and others. But even with the mid-cap IT names, even they are starting to turn. But watch 34,200, that's the absolute important marker for me for the sector.
Right, yeah. Just stay with us. We've also got a whole bunch of stocks that we've already talked to you about that are in the news on back of block deals and QIPs. Anushi's standing by with the stocks that are topping the list. Anushi, stocks like Aster, CDSL, even the likes of an Angel One are in the news today.
Right. Samina, a whole list of stocks, especially today. Now, if you have to look at first on the list is scorecard, over here it closed a QIP of about, at an issue price of about 517 to raise about 480 crores, which was like quite a notable names have come out of this, like Madhusudan Kela, 6.25% of offer size over here, followed by ICICI Prudential Fund, and in other funds include Mirai Asset Fund, Investco India as well. Now, if you come to Aster DM, healthcare and focus, the shares dropped as much as 7.54% today. Quite some strong volumes also. Now, over here, this is based on the media reports that PE firm, that is private equity firm, Olympus Capital Asia is selling up to about 1,953 crore of a stake sale over here. And this planning is up to about 8.5% of a discount comparatively. Moving on to CDSL. Now, CDSL Standard Chartered Bank looks to sell about entire 7.2% in the via block deal today. Again, the deal size for the same as is about $151 million, which at a price of about 1,672, which showcases a discount of up to 6.2% compared to the yesterday's closing price. Now, there are other stocks also. Angel One, which had launched a QIP at a price of about 2,555. Again, a floor price of about 6.3% discount. Moving forward, what remains in focus is Prism Johnson, where the board is considering a fundraise of through NCDs, that is non-convertible debentures. The meeting is set at March 29 for the same.
Okay, got it. Thanks, Anushi, for getting us those details. I want to focus on one of these stocks, which I mentioned at the start, of course, but it's Angel One, and it is up at this juncture as much as 9%. And it has quite the story, right? It's down about 17% for the year to date, but over the last year, what a run it has had. Just the last 12 months, it is up as much as 164% or thereabouts. Jay, what's the view on Angel One? Seemingly over the last couple of weeks or thereabouts, very short term, there has been a bit of a bounce in the stock. What are the levels telling you?
And it's done that. And I'm a bit worried, but I'm cautiously bullish. I think fresh record highs closer to 4,000 might be back on the cards. But, I've got to be exercising a lot of caution because it can be interpreted both ways. But, I'm tending to lean towards the bullish way. So, if you're taking a bullish stand, 2,400 is an important stop. So I believe, as long as that holds, there's potential for it to go back and retest the all-time high of about 4,000.
Right. Well, we have 30 minutes to go as we will start wrapping down and winding down today's day of trade. Like we said, it's turning out to be a good day. 22,160 on the index, with the small cap index leading the way up in today's trade. The breadth of the markets, more or less a 50-50 picture, but not too many concerns on that front yet. On the broader markets, of course, it's action-packed. You've got stocks like JM and IFL Finance. Both those were two big losers in trade yesterday on expectations of a special audit by the RBI on the 11th of April. Today, both those counters have reacted and recovered very well, up about 9.5%. Both at the day's high point. I'm not sure if there's anything else on the front for that news point. Angel One, on back of its fundraising plans, is also up 9%. Actually, all those capital market players aren't doing too badly, barring CDSL, which is down and out on back of that block tail. But apart from that, diagnostic players are looking good. Real estate stocks are also not looking too bad. Street favorites like Electra also having a positive day. We'll take a break. We'll come back. On the other side, we'll talk to Jay about his buy today, sell tomorrow, or sell today, buy today strategies on the other side. So stay tuned.
Welcome back. We're winding down towards the close of today's trading session, and just pull up the intraday chart on the Nifty 50. Just over the last few minutes or so, you're seeing a bit of a downtick. We're still trading with gains of about 0.5% or thereabouts, and broadly, the market breadth is even Stevens at this juncture. The broader market's looking reasonably good. The bit of a drop that you've seen in the mid-cap index as well. The mid-cap 150 index trading with gains of just about 0.1% at this point. And the small-cap 250 index trading with gains of over 1%. So that's where the strength is at this point. Or rather, okay, so that's also dropping. In fact, it's up about 0.9% at this point. Let's take the latest cues from the F&O space. We're heading into the monthly expiry tomorrow. And Agam standing by to give you some perspective on what to look at in terms of the latest cues. Agam?
Right, so Alex, overall, notwithstanding and not considering what's happened in the last 3-4 minutes, overall it's been a very quiet day of trade, and we haven't seen too much traction as far as the Nifty is concerned, about a 0.5% gain there, and we continue to see addition as far as the April futures is concerned as we move into the new expiry. There you have it, about a 31% added in OI. As far as the Bank Nifty is concerned, it was also in focus on account of the weekly options expiry, and the Bank Nifty at the moment is advancing, up by about, 0.3 of a percentage point. Naturally, the March ones will see unwinding, but we about a 23% added in open interest as far as that one goes. Moving on, as far as the option market is concerned, well, we are keeping an eye on, when we were keeping an eye on around 22,000, 22,100. That's exactly where we've seen the most amount of traction too, because through the course of the day, we've seen the Nifty hold on to gains coming in. And because of that, at the moment, we continue to see that base building formation around 21,900 to 22,000 on the lower end, where we have seen accumulation of puts, and on the higher end, continuing to see about 22,500 as where we are seeing a little bit more accumulation as far as calls go. Let's move on and talk about a handful of other factors that are playing out here. In terms of stocks, watching out for Z Entertainment, which is looking at longs along with Tata Chemicals and Titan. Of course, because it's the April futures, we are going to largely just see an increase, and these numbers are going to be relatively larger. And of course, some shorts building up for Biocon and Divi's Laboratories. All in all, a quiet day of trade, which does beg the question whether or not tomorrow, which tends to be the monthly futures expiry as well, should that bring volatility? Well, that's something that we will get to know moving in tomorrow as well.
Thank you so much, Agam, for getting us those details. We want to talk about Reliance Industries, one of the big movers today. It continues to be the big, the contributor to the Nifty's gain right now. Touching a day's high, by the way, of 3,000. That's quite the landmark. Vijay Chopra, MD and CEO of Enoch Ventures, is joining in to give us some perspective on that and more. Vijay, thanks as always for taking the time and for speaking to NDTV Profit. Let's talk about Reliance Industries at the start, up over 3%, lending quite a bit of support to the benchmark, and it's broken a bit of a funk, as Samina pointed out earlier today. What do you make of the stock? And, we're reading that it's based on one particular brokerage note, but I guess there's more playing out. How are you looking at the stock?
Well, loads of money has come out of small caps and large caps, Alex. And, which is the more safer company rather than the largest one in the country. So I think that money is chasing the large caps, and somehow Reliance is everybody's favorite. Over a period of last few years, Reliance has consolidated well, and I think that, it will further keep on going up. One of the, buzz is that there's going to be an upward increase in the tariffs in the telecom space. So definitely, Jio is going to be a major beneficiary out of the entire scheme of things. So that might be one reason. The other is that there is a general buying and a general tendency that, people have bought large caps. So that is the reason why it is going up. And of course, it is March ending, and most of the mutual funds have to, set their NAVs in order. So that might be one more reason. And there is a short covering which was imminent. And I think that, today is one of the days where we are seeing some kind of a short covering. So maybe tomorrow as well, as the year closes, we might see markets actually buzzing. And, probably we won't see a dip tomorrow as well.
Vijay, very quickly, what's happening in JM and IIFL Finance? The stocks were both under pressure yesterday because of that expectation of a special audit by the RBI. Today, there's a 10% recovery. Is this just a technical pullback, or fundamentally, you think IIFL and JM Finance deserve those gains?
Well, until unless RBI finds out some irregularity, I don't think that these brokers are bad with any stance. JM is one of the largest brokerage houses, one of the most respected ones. And, there are times when big companies also come under the hammer of the regulator. So that I really don't know what kind of problems might come up, or there are skeletons in the cupboard or not. I am really not capable enough to comment on that. But yes, there might be a technical bounce because these stocks were oversold, and there are technical gaps as well on the chart. So wherever we see large gaps in the charts, so there is definitely a technical pullback. But again, fundamentally, I would be very comfortable until when RBI comes up with gives them a clean sheet and there are no irregularities or any kind of that stuff. So if at all there is nothing, so JM and IFL are good companies again, good to buy.
Hold on, Vijay, I'm going to go to Jay on what he's seeing with the benchmark, because the Nifty 50 now trading just below the 22,100 mark. Jay, not a very big move, but it is, a bit of selling that is coming from the high point of the day, about 100 points or thereabouts. What are you making of the latest move?
Yeah, as I pointed out in my opening statements, I said that 22,200 is a very important resistance, and very clearly the market today's high is 22,193, and the markets are coming off from there. Right? Until so far, nothing to worry about. But if the index were to break 21,735, only then you'll have to start worrying, and the weakness will start setting. But it's not something to be taken lightly, or to be monitoring the price movements of the next few hours, including tomorrow's session, very closely. Things can start to turn down, because the markets had reached important price levels on key stocks. So I'll be, as I said, I'll be watchful. The trend is still up until the supports are taken out, but nothing to be taken lightly.
Okay, fair point. We have spoken about a few of these stocks on the technicals, but I'm curious about what Vijay thinks about the likes of Maruti Suzuki, for example, which breached the 4 lakh crore mark in market capitalization earlier today, the first automotive company to do so. It is off the high point of the day. But Vijay, what do you make of this particular counter? Would you say that it's still a buy at this point?
You're talking about Maruti, right, Alex?
Yes, absolutely.
Well, I think that I completely agree that it is one of the largest market shareholders in the entire four-wheeler market. But yes, it has become, I think that, it should come down a bit, and only then one should get into. And on every high, you should keep on booking profits. That would be my recommendation for investors or traders who have got into the stock. Although I'm a long-term believer in Maruti, their overall strategy has been stupendous. Over the years, they have maintained that lead over there in the market, and they have actually shown their competitors that they are way above in understanding the nuances of the Indian automobile buyer or the automobile market. So I would say keep on booking profits. It should be the strategy in this stock, and wait for maybe around 11,000 levels again, if at all you want to get into it afresh.
Vijay, you've been looking at the fundraisers, a lot of QIP news, both today and of course in the recent past, a lot of blocks taking place. And the pricing of all of these is quite interesting, because you're seeing discounts of 6-7% even in some situations. One would assume, based on the kind of money that's flowing into the system, that liquidity is not a concern at all. Why then is the pricing not tighter?
Which company are we talking about,
So
Alex?
we're talking about the likes of Angel One, QIP is just done. You're talking about a few others. There's Aster DM that had a significant block. We're talking about a few. So let's pull up some of those data points.
Alex, CDSL also.
Yeah, CDSL. That's right. Yeah,
CDSL. We
6.5% discount.
Yeah, it was at a discount. Definitely, if somebody wants to exit, why? There would be some kind of a negotiation with the company, and why should the company buy at a higher price? So if at all there is a block happening and they want to sell, the company wants to buy again, or there's some block deal, some buyer is buying. So I'm sure that one, the liquidity is enough. Secondly, buyers definitely want a better deal, so that's why the discount. Again, I'm a long-term believer with that CDSL should do very well with this T+0 settlement coming in, money flowing into the depositories every day. There might be people who trade, and they actually keep on booking profits at a very small profit. So CDSL's income would keep on going up. So my sense is that CDSL is a great buy at these levels. Talking about Angel One, I think that there is a technical on the technical charts. There's a gap on around say 3,600, 3,650. So this stock should move up. It's a great broker. Their online platform is wonderful, and they have logged in a lot of new customers. So I think that One part is liquidity. Second is that, if somebody wants to exit, so why to exit at a higher price? So people, buyers are buying at a lower price.
Okay, fair point. Just a follow up, we spoke about a couple of companies that are associated with the capital markets, and quite a few of them, barring CDSL, are doing incredibly well in trade today as well. BSE as well, up about 5%. They have dropped a little bit, but they're still elevated if you look at valuations and what they have been on an average over the last few years. What would you say about the potential in this space? Would you wait for a bit? If you're holding, would you book some profits?
Alex, extremely sorry. Which stock are we talking about?
So we're talking about the likes of BSE, as I mentioned. BSE is up quite considerably today as well. It's up as much as 7%. We're talking about CDSL.
So I still think that BSE has a huge potential. The kind of customer additions we have seen, people who've been trading, new additions in the overall number of people participating in the market. So on the charts, I don't see BSE as an expensive proposition. My sense is that it can definitely go up to 3,000. So BSE still has a lot of steam. As far as CDSL is concerned, which is down today, I think that it's an opportunity to latch on to the stock, wait for a few months, and I'm sure that there's good money to be made in CDSL. Because the revenues I'm talking about, that people who trade every day when the stock would flow into the depository, CDSL gets a fee. Whenever they exit the stock, and there is a large chunk of traders in this market. So there's going to be a huge transactional thing going on, and this transaction fee is definitely going to better the bottom lines of CDSL. So I'm fairly confident 1 to 2 quarters down the line, CDSL's bottom line would definitely, top line and bottom line both would be much better than what we see today.
Okay, do stay with us. We just want to get a view from Nilesh, or rather, we had a conversation with Nilesh of Envision Capital earlier today, speaking of opportunities to invest. And here's what he had to say about the potential sectors to look at closely, even at this current market valuation.
The whole drive towards digital India, India's decade, and the fact that we are having a huge formalization and financialization of the economy. So clearly the online fintech segment continues to be a very, very kind of an attractive opportunity. Clearly, be it online broking platform, be it an online insurance platform or an online credit platform, clearly that's a great opportunity to be in, or it could even be a very normal home lender, but using technology to kind of deliver loans in the affordable housing segment. So that, I think, as a pack continues to be very great. So I'd probably say that the online financial or the fintech space continues to be very attractive from an investment point of view. And the second would be around the premium consumption side. Still believe that there's a huge opportunity for premium consumption, and that would probably be the second area of preference.
All right, premium consumption. One of the stocks of the day today, and we've spoken about it briefly, ABB India, it's up about 5.8% as we speak. And there was a note by UBS that came out just a short while back, and it has retained its buy rating, but it's raised its target price quite substantially. The potential upside is significant even from this point. Anushi is joining in to talk about what they said in that note. Anushi, what is the rationale for the uptick in the price target?
Right. So even if you had to look at ABB, quite some strong moves over here, about 6.5% or rather 7% of an intraday gain just today, while the volumes also traded at about 2 times its 30-day average. Now, this was on the back of UBS acting as a catalyst for the stock, and they have cited a couple of reasons. First is the electrification and motion, which is continue to drive the growth and the margin performance of the business. Do note that these both segments are the largest revenue generating segments, and motion segment in particular is margin accretive for the business. Also, UBS has now picked ABB as its best play on infra scale-up in the low, medium to voltage business. Now, again, with this, the company expects to ramp up in this space where it is currently lagging behind the likes of Schneider and Siemens. Another factors to be considered is the better growth prospects in its export, which currently contributes about 10% of about 10% of revenue mix. So with this, the premium products is being targeted. So again, this will add value and more margins for the business. With this, they also, with the improvement in the margin profile, it also will support the premium valuations going forward. So that is what UBS is betting on. However, on the near-term concerns, the short cycle orders for the motion segment remains on the watch list. So we'll definitely keep a watch on that as well. Now, about the overall performance of the company, if you look at the 3-year revenue CAGR performance, about 22% of an uptick over year, while it is the EBITDA which is in the focus, about 75% of our CAGR growth in the last 3 fiscals. That is on the back of the improving product mix of the company, especially if you look at the motion segment also. If you have to look at the order backlog of the company, about 30% of an uptick over year. So if you look at the CY 21 to 23, that is almost the double of what has happened, 4,900 of our backlog compared to about 8,400, which by showcasing about a 30% gains in both of the respective fiscal years. So this is all that has been building on in ABB, if you have to consider, which is in focus today on the back of UBS giving it a buy call.
All right, thanks so much for getting us those details, Anushi. Vijay, what do you make of ABB India? Do you concur with some of the points that have been laid out in terms of the potential for earnings growth? It's achieved a 75% CAGR on the EBITDA front over the last 3 years itself. Does that trajectory continue according to you?
Well, I recommended ABB not on your channel but few other channels about 4,500, and I'm a strong believer that this company is a portfolio stock. So long-term investors, who are not concerned with the up move or down move of the company so much, I would say that they need not worry. But traders, yes, I think that book profits on every spike. If at all you get this stock again at around say maybe 5,100, 5,200, it would be a wonderful buy at those levels. But yes, I think that when markets are touching all-time highs, stocks are touching all-time highs, it's not a bad strategy to book profits. Even if you book profits in Reliance doesn't become a bad company. But wait for the right time, the right price to get into. I think that if you've got at the right price, we recommended it to our clients at around 4,500. We exited around 6,000. And I'm not saying that it was a perfect exit. Nobody can predict the top or the bottom. But yes, and I think that the stock is looking a bit expensive. Although the company is great, the earnings are in place. So if at all you get an opportunity to buy in a correction, that would be a better strategy rather than buying at these levels. So traders, especially on every spike, keep on selling, keep booking profits, and again wait for the correction to get into the stock.
Fair point. That's the view on ABB as well. Coming to you, Jay, on your buy today, sell tomorrow calls, or possibly even on the short side, if you have something as a recommendation.
I have one on the long side and one on the short side. Spandana Spurti Financial, that's looking pretty interesting. It's had a steep fall from about 1,200 plus to about 780. That looks like a completed move, and today's wide range is a bullish outside day. So the 788 low might be the end of a correction, or at least a bounce back. So for BTST, the stop is about 820, and I expect this trend to continue tomorrow too. But if it were to continue tomorrow, it will mean that there's a short-term uptrend that's in place. So for that, the stop is 788. On the short side, Wipro is having a breakdown. So most of the IT names aren't looking so good. So Wipro's fall is below important support. So I would place a stop at about 490 for Wipro and expect it to continue to somewhere close to 460 to even 440.
We were talking about State Bank of India as one of the underperformers today. It has, in fact, recouped some ground and it is coming very close to that 0.5% lower. I'm just curious, so PSU banking as a pack has underperformed today and in fact in the recent past. Vijay, State Bank of India first and foremost, what's the view on this particular counter? People are perhaps waiting for something to give in the banking space. How would you play the space?
Well, I think it is one of the jewels in the entire banking space. Look at the asset quality. Look at the credit growth. The NIMs have been improving, and I am a believer that if somebody buys SBI and holds for maybe another 5 years, it can double. A behemoth and a heavyweight like SBI can double from here. But yes, there is a lot of steam in the public sector banking space. I think that banks like Canara, Union, Indian Bank, Bank of India, these are great banks to have in portfolio and buy in a correction. So I would say that don't get dismayed. It's a quality company. And I'm sure that, in the coming year, we'll see some betterment happening. The loan book has been healthy. The overhang of bad debts and overhang of a bad asset quality, is gone by. And I think that PSU banks have done very well, managed their books very well in the last few years. So I think that, SBI is a buy on a correction. So if it's an ideal price would be around 680, 660. If at all in a correction, you get SBI. Otherwise, long-term holders, they should keep on holding. My sense is that, it can double up from here in the next 3 to 5 years.
Okay. I'm curious about what you think of Interglobe Aviation as well. And I know that I'm shifting sectors quite dramatically, but this is a stock that we were focusing on yesterday. It's up and about today as well. It's up about 1.7% or thereabouts. And there were a few reports that came out post what I think or what we understand was a conversation with analysts where they're talking about capacity addition, Vijay, to the extent of 1 aircraft per week for the rest of 2024. And that's quite a substantial addition to capacity. What do you make of it? Do you have coverage, first of all, and would you buy at these levels?
Well, we definitely cover, the kind of growth we have seen in aviation. Look at the airports, you need complete 2 hours to actually check in and board the aircraft. So gone were the days when you were sitting on the lounge and, waiting. There's so much of traffic, so much of, even if you catch a 5:30, 6 a.m. flight, there's a huge amount of rush. So I think that India, with the new airports coming up, with the regional connectivity, with the kind of affordability, people's growing incomes, so airline business is going, only upwards. But, you've asked a very fair question at this point that whether you would buy into an Indigo right now. I would say no. I would say that as the stock touches 3,600 or 3,700, keep on exiting. No need to buy at these levels. If at all you find this stock in a correction anywhere between 3,000, 3,100, great time to buy Indigo. It is the largest airline in the country. They, barring the winter months, most of the times, this airline has been doing real good justice. And the numbers which they posted, and first and foremost, the company is very, very bullish on the India airline story, and they are also flying international. So if they're ordering so many aircraft, there must be a reason. There's a huge amount of maths which the company must have done. So I'm fairly bullish on Indigo with the longer term. Even after the major promoter selling about 7% stake, the stock has actually come up. So this talks about the strength in the company, and there are more buyers. There are, the funds and HNIs, and there are a lot of people who want to get into the India growth story through the aviation sector. And Indigo, so to say, is one of the best right now.
Okay, so there is also, now we're just a couple of minutes away from the close, but while we're at it, Jay, I want to talk about the rebalancing of the Nifty 50. One addition, as far as I can see, Shriram Finance, if I'm not mistaken, is the counter that's going to be added. But there is going to be a change in the weightages as well. Some of the counters going to be getting a substantial amount of inflows. Is that something that you're going to take into account heading into tomorrow?
I generally don't hold Indian stocks in my portfolio, but I hold this one, so I won't talk about this. It's one of the last of my Indian holdings. I've been holding it since the year 1992 from the convertible debentures. So I'll have a vested interest in this, so I won't talk about it.
Okay, fair point. Then why don't you talk about the key levels heading into tomorrow, because we're more or less ending with gains of about 0.5% for the Nifty 50. Crucial to talk about the monthly expiry. What levels are you looking at closely?
Yeah, yesterday's low is pretty important. If the markets were to break yesterday's low, I think a corrective top would be in. Today's high is about just short of 22,200. So yesterday's low is very important, and also from a slightly higher time frame, 21,730. that will, if it were to go on an expiry day, it will signal start of a medium-term correction.
All right. Vijay, as well as Jay, thank you so much for joining in, for giving us all the perspective that you did today. Always a pleasure having you on NDTV Profit. We are winding down, just about 20 seconds odd left, and we're talking about gains of about 0.7%. Not too bad if you think about it. Where we started off was practically flat, and we had a bit of a negative bias at the start. You have the Nifty Bank, in fact, that is moving higher and ending not at the low point of the day, off the low point of the day. You have the broader markets, of course, the mid-cap 150 index that has given up just a tad bit of ground, but you have the small-cap index that is ending with gains of close to 0.8% or thereabouts. In fact, we are at closing right now, so let's look at the patchwork for the Nifty 50. Right on the top of the screen, you have Reliance Industries, which is ending with gains of close to 3.5%, and probably the reason why you're seeing such strong gains for the benchmark index in trade today. You have the likes of Maruti Suzuki, which is going home with gains of about 2.5%, and as we mentioned, it did reach the mark of 4 lakh crore on the market capitalization side earlier in trade today, and that's quite a landmark for an Indian automotive company. You have Bajaj Auto that is did quite well in trade today as well. The Bajaj twins not too far behind. Bajaj Finance up about 1.7% or thereabouts, and doing quite well. In fact, it has gained about 5% or thereabouts just over the last 5 days or so. And you have a few on the downside, of course. You have had State Bank of India, but it recovered quite sharply to end more or less in the middle of the pack. And on the downside, you have UPL as well as a couple of the IT names that were in focus. But that brings us to the end of this particular edition of India Market Close. Do stay tuned. Lots more coming up over the course of the day. And this is NDTV Profit. Okay. Sure. It's a happy Wednesday for the Indian equity markets, with gains for the benchmark Nifty 50 of about 0.5% or thereabouts. The broader markets, the mid-cap index gaining just about 0.1% off the high point of the day, but the small-cap index doing quite well, ending with gains of close to 0.8%. By and large, the market breadth was more or less even-stevens for most of the session, and in fact that crossed out towards the end of the session, where you saw more declines than advances, a bit of a downtick towards the end. But let's take a look at the key contributors for the Nifty 50, and you'll see right on the top of the screen, you'll see Reliance Industries, which gained about 3.5% in trade today and lent quite a bit of support to the benchmark Nifty 50. You see a few more names, and Maruti Suzuki stood out today because it gained 2.5%, but also because it crossed the market capitalization of 4 lakh crore in trade today. Bajaj Auto as well as Bajaj Finance doing well as well. On the bottom of the screen, you had the likes of UPL as well as Hero MotoCorp and a few of the IT names that underperformed. Wipro down about 1.6%. LTI Mindtree also down about 1% or thereabouts. Now, from the broader markets, there were a few that I will mention. ABB India, arguably one of the stocks of the day, gaining about 5.9 or 6% or thereabouts. There was an upgrade in the target price by UBS, and that is factoring in the stock. You had Aster DM Healthcare, where you see nearly 10% stake sold, and it ended with cuts of about 7% or thereabouts. You also had Wockhardt and CDSL that moved quite sharply in trade today. But by and large, we're sanguine heading into options expiry for the month tomorrow. So we'll have to see whether that brings volatility with it. For now, that's a close.
Market ends higher as benchmarks rebound, led by gains in Reliance, HDFC Bank and Axis Bank. Sectoral indices close mixed, with Nifty Realty closing as the top gaining sector. BSE releases the list of 25 eligible stocks for same-day settlement cycle under T+0 from tomorrow, including the likes of SBI, Bajaj Auto and Vedanta. The Kalyani family feud intensifies as Baba Kalyani's niece and nephew seek division of family assets in the Pune court, seek transparency and demand disclosures about the assets. Chocolates are expected to get pricier as cocoa futures crossed $10,000 per ton mark. Hershey's Global expects the spike in prices to limit the company's earnings growth for this year. The Ministry of External Affairs reacts to the US State Department spokesperson's remarks on Delhi Chief Minister Arvind Kejriwal's arrest, warns of unhealthy precedents and against unwarranted aspersions, summons US diplomat. Hello and welcome. You're watching The Reporter on NDTV Profit. I'm your host Pallavi Nahata, and as always, the bulletin aims to bring to you market headlines along with national and international news. Now, first up, before we can move on with the show, it's time to see how the stock markets have performed today. Keep in mind that the NSE rejig is tomorrow, and Nuvama Research has said that the Nifty 50 might attract inflows of $349 million due to the rejig. My colleague Alex joins us for a quick markets wrap. Alex, what are the markets faring like today?
It's a happy Wednesday for the Indian equity markets, with gains for the benchmark Nifty 50 of about 0.5% or thereabouts. The broader markets, the mid-cap index gaining just about 0.1% off the high point of the day, but the small-cap index doing quite well, ending with gains of close to 0.8%. By and large, the market breadth was more or less even Stevens for most of the session, and in fact that crossed out towards the end of the session, where you saw more declines than advances, a bit of a downtick towards the end. But let's take a look at the key contributors for the Nifty 50, and you'll see right on the top of the screen, you'll see Reliance Industries, which gained about 3.5% in trade today and lent quite a bit of support to the benchmark Nifty 50. You see a few more names, and Maruti Suzuki stood out today because it gained 2.5%, but also because it crossed the market capitalization of 4 lakh crore in trade today. Bajaj Auto as well as Bajaj Finance doing well as well. On the bottom of the screen, you had the likes of UPL as well as Hero MotoCorp and a few of the IT names that underperformed. Wipro down about 1.6%, LTI Mindtree also down about 1% or thereabouts. Now, from the broader markets, there were a few that I will mention. ABB India, arguably one of the stocks of the day, gaining about 5.9 or 6% or thereabouts. There was an upgrade in the target price by UBS, and that is factoring in the stock. You had Aster DM Healthcare, where you see nearly 10% stake sold, and it ended with cuts of about 7% or thereabouts. You also had Wockhardt and CDSL that moved quite sharply in trade today. But by and large, we're sanguine heading into options expiry for the month tomorrow, so we'll have to see whether that brings volatility with it. For now, that's a close.
Well, it'll be interesting to see how the markets close at the end of the fiscal year. We're in the middle of a truncated week, and it's likely that the next day of trade could be choppy, but we'll see how that goes. We spoke to Kenneth Andrade, the CIO at Old Bridge Mutual Fund, and he discussed his top sectoral bets. Listen in.
As we continue to grow, we have to take market share from the rest of the world. Now, you have to go and figure out companies that will build their franchise in the rest of the world. That's one element of all of it. We've seen how much wealth IT has got to be created. We've seen the dominance of Indian pharmaceutical businesses in the West. We've seen how Indian chemical companies have gone out and made their mark. And from there, you will see multiple number of more businesses. I mean, we are the second largest steel manufacturers in the world right now, and we're growing capacity out there. So all of this is coming together quite nicely. Now pick your franchise out there, and this is the large trend that is playing out. Domestically, infra businesses and utilities, I mean, they are expanding at or at least the numbers that if you put the numbers together, it's going to be a scale business that is out there. Now in that scale business, you've got to allocate your capital to parts of the value chain where you feel comfortable with and where you think the returns will I won't say it's back-ended, but to have a large extent an outlier return out there. So these are the two pockets that are there. The third pocket, which is the consumer economy, I think that will come back. It might have a shorter cycle than the last time, but whenever it does come back, you've got to be a little ready for some of those businesses. Now, case in point is if you look at all the QSR businesses, they're going through a massive expansion in number of stores or in capacity, not numbers, so in capacity. But the market cap has gone just one way, which is down. So look for these trends, look for a bottoming out of the entire cycle, and just work your way around it. So the first two are my priorities. The second one is essentially, the third one is essentially something that we're waiting and watching for.
In more markets news, the BSE has released the list of 25 companies that will switch to the T+0 rolling settlement cycle. The cycle will be live from tomorrow, March 28th. My colleague Saloni Kothari joins us with more details about the cycle. Saloni, over to you.
T+0 settlement is going to be a reality from March 28, but remind you that this is going to be done on an optional basis and the beta version will be launched. Now this will be reviewed at the end of the third and the 6th month, and the market regulator will decide the course of action after the review, and this is going to be done for 25 stocks with a limited set of brokers. Now what is T+0 settlement? It aims to settle the trade that you've done today on the same day. Right now T+1 settlement is something that has been used, which means that the money that you get after selling a stock, you get it the next day. But T+0 is going to change that. And talking about which of the stocks are going to be available for trading, NSE and BSE has released stocks, and which means that Bajaj Auto, Ashok Leyland, Vedanta, SBI, Tata Communications, Ambuja Cements, Bank of Baroda are some of the 25 stocks that are going to be available at the beta version of the launch. What about the market timing? The new settlement is going to be on a continuous basis from 9:15 a.m. till 1:30 p.m. Till the time the review is done. And who all can trade? Actually, all members and investors are allowed to participate in the same.
Thanks a lot for that, Saloni. So moving on, the Kalyani family feud has intensified as Bharat Forge chairman Baba Kalyani's niece and nephew have moved the court against him. They're demanding disclosures about family assets. What is the feud all about? Charu joins us to tell us more. Charu?
Sameer Hire Math and Pallavi Swati, who are the grandchildren of Neelkant Kalyani, have filed a case for division of their family assets in a civil court in Pune against their uncle, Baba Kalyani. Now, what they are asking for from the court is not only just their proper share, they are also saying that the defendants whom the case is against should also disclose the number of assets the family owns. So basically, they are saying that long back, almost all these new businesses were started with the undivided family wealth. And from that, a lot of wealth has been additionally accumulated. So a list of all these things, all these material wealth, businesses, wealth, riches, everything should be disclosed. And then based on that disclosed information, a proper division of assets should take place. Now, what has happened is the petition also alleges that due to the management style of Baba Kalyani, the family felt that they have no other option but to approach the court for a rightful division of the assets. They have also said that they are scared and worried that since this case has started now, the people involved, including Baba Kalyani, might try to do something to the wealth that they have accumulated, or try to transfer it somewhere, or try to, mismanage it in some way. And that is why they have also asked the court to basically pass some sort of an interim direction to stop them from doing so. And also they have asked to appoint a receiver to basically manage all this wealth for a short period of time while the matter is pending. That's all we know for now. We'll keep you updated with any more updates.
Moving on, L&T has announced a 7,500 crore rupee fundraise via commercial borrowings, NCDs, and the CFO told NDTV Profit that this fundraise will help refinance the maturing debt during FY25. Saloni once again joins us with more details on that.
Right, Pallavi. So L&T yesterday announced that it's going to be raising about rupees 7,500 crore through issue of commercial borrowings or even NCDs. And this comes right after the company had bought back around rupees 10,000 crore worth of shares in September. So the question was exactly what is the company will be using the funds for. So we spoke to the L&T CFO and he told us that the fundraise will be used to refinance maturing debt during the financial year of 25, that is next financial year, and this will be done within the current overall debt to equity position of the company, which is at around 0.3:1, and it's going to be the same as what he said. Now we also looked at some of the key numbers to understand where exactly, at least till last quarter, the numbers stand at. So the gross debt to equity ratio has actually risen in the December 2023 quarter to 1.23x from 1.13x in March of 2023, which was FY23, and the net debt equity ratio has also risen to 0.81x as of Q3 of FY24. Now talking about the total borrowing, the total debt which the group level has, that has also risen to about 1.2 lakh crore in Q3 versus 1.18 lakh crore during the March of 2023.
Well, and what's not very comforting news for chocolate lovers? Chocolates are set to get pricier as cocoa prices have surged to new highs and have crossed the $10,000 per ton mark. My colleague Sesha joins us with more details on that. Sesha?
Right, so historically high cocoa prices, that is the key ingredient for chocolates, is bound to hurt Mondelez, Nestle, Parle and Hershey alike. Poor harvest in countries like Ghana and Ivory Coast, which produce the world's largest cocoa, have caused this sharp escalation. And the bad news is that after having doubled in 2024, the prices are unlikely to come down, with the International Cocoa Organization expecting a wider deficit in supply this year compared to last year. A whopping 3.74 lakh ton in supply deficit is expected this year, which is probably the highest in the last 60 years. Companies generally have a hedging strategy to manage such price volatility. But if the prices continue to jump at unprecedented levels, they will have no option but to pass on the cost burden to the consumers in order to protect their margins. Now, remember, cocoa is climbing as prices of other commodities like wheat and sugar are also starting to rise all over again, added to the cost pressure. So consumers must be prepared to pay a little extra when they buy that bar of chocolate next time.
Thanks a lot for that, Sesha. Moving on, the Asia Pacific Economic Cooperation Climate Center has predicted that India is likely to experience above normal monsoons from July to September. Now, with the La Nina set to return, the center has issued two separate forecasts, one for the periods from April to June and the other from July to September. We spoke to GP Sharma of SkyMet about his predictions for the monsoon and the possible impact. Listen in.
La Nina conditions will build up. At the moment, El Nino conditions are there. They have not gone anywhere and they are not likely to go soon. Okay, so whatever the forecasts are coming, they must go with a little caution. El Nino still remains, abnormalities still remain, conditions are still turbulent in the Pacific Ocean, which holds both these phenomena, El Nino and La Nina. But yes, rightly you said, going on the historic records, Southwest monsoon, that's an Indian monsoon, it generally rides well when the La Nina conditions are there. And there is no doubt that La Nina conditions will build up. It may be happening a little later in the season to start with neutral conditions when the monsoon comes, and then gradually we slip into La Nina. That will happen. And then that's a good indication that possibly we will have a little better monsoon prospects this 2024.
With that, it's time to slip into a short break, but stay tuned. We have a lot more lined up for you on the other side. Well, hello and welcome back. You're watching The Reporter on NDTV Profit. Now, Bajaj Housing Finance is preparing for an IPO worth $1 billion. Let's go across to Pragati Oberoi for more on that. Pragati, what are you picking up?
Right, Pallavi. So Bajaj Housing Finance is planning an IPO worth $1 billion. That's what sources are telling us. Now, we must remember that Bajaj Housing Finance is the wholly owned subsidiary of the company Bajaj Finance. Now, what we are gathering from our sources is that the conversations are still in early stages and only the planning has as of now started because nothing has been finalized, and the entire process is expected to kick off in about 2 to 3 weeks. The valuation is expected around $10 billion and the IPO size is expected around $1 billion. That's how the calculations are flowing. Once again, these are the expected numbers and where the conversations are headed. What the final amount comes out will obviously be known once the planning or the process kicks off. We also know that based on the process or where the step is at, the listing of this company is expected around the end of 2024 or early 2025. Now, we must remember that Bajaj Housing Finance's listing or the IPO is very important because the company needs to comply with RBI's scale-based regulations, which need the company to be up on the exchanges by October 2025. That's the deadline that they have. So before that, the company is planning this IPO. We'll bring you more details as and when we have them.
Thank you so much for that, Pragati. As she's mentioned, we'll continue bringing you more details on that. But moving on, Renault Nissan is planning to invest $600 to $700 million in India over the next 3 years to make it an export hub, as well as launching 4 cars over the same time period. My colleague Tushar Deep Singh joins us with more on that. Tushar?
Thank you so much, Pallavi. So essentially, Renault Nissan plans to invest about $600 to $700 million in India over the next 3 years, precisely to make the country an export hub. So where will this money go? First of all, for platform localization. Essentially, more cars will be made in India with more local parts. Remember, the Renault Kiger as well as the Nissan Magnite are made in India for the world. So we can see some more products on those lines. The investment is aimed at increasing sophistication in manufacturing. The current plant has an automation of 12%. We can expect that to go up. More powertrains are also supposed to come up at this plant, that is internal combustion engines as well as hybrid engines. But the EV plans are right now put out in cold storage. No guidance on that front. So as far as the car launches is concerned, there are 2 cars across the 2 brands. That is a total of 4 cars will be launched in the next 3 years. One is a 7-seater XUV and the other is a 5-seater SUV that will come up. Again, these cars will see heavy localization in India. What did the management say? So according to the chairman, Jean-Dominique Senard, India is at the heart of the Renault-Nissan alliance, global operations. Renault and Nissan have 1.4 million cars in India, 2.7 million cars have been produced so far in India in the last 17 years of their operations in the country. Every step of the car manufacturing process happens here. Nissan Magnite and Renault Kiger are the properly local in Renault Nissan cars in India. The management also spoke about how it sees the competition. Where the Renault Group CEO, Luca Di Meo, said that compared to the big boys in India, Maruti Suzuki, Hyundai, Tata Motors, etc., we are small scale, but we are a global company with significant strength elsewhere that can be brought into India. Never underestimate the strength of this alliance in this country going forward. So essentially, a very bullish stand by the alliance here. It's kind of a revamp for the alliance. So what comes next, we just have to wait and watch.
Thank you so much for that, Tushar. And with that, it's time for some macro updates. India's current account balance recorded a deficit of about 10.5 billion. That's about 1.2% of the GDP. This was for the October-December quarter. It is better than $11.4 billion. That was what the revised estimate was for the previous quarter. That's Q2. And that's about 1.3% of the GDP. That was news that came in last evening. But economists actually expect the current account deficit to continue to improve. If anything, economists are forecasting a marginal current account surplus for the ongoing quarter, and that's likely to be aided by an improving merchandise trade deficit and continuously resilient services exports. Gaura Sen Gupta, economist at IDFC First Bank, said that she expects a mild current account surplus in the ongoing quarter, led by strong services and remittances, as well as a moderation in the trade deficit. Because of that, balance of payments is also expected to see a higher surplus of about $20 billion. That's for the ongoing quarter. Now, according to Madhavi Arora, lead economist at MK Global, she forecasts the current account deficit for the full year at about 0.8% of the GDP. That is better than what was being expected ahead of yesterday evening's figures. This is, of course, on the back of better than expected current account deficit yesterday and better than expected performance going forward as well for both goods and services exports. Healthy services exports, especially in IT and the solidly emerging space of business consulting and financial services, have helped the Indian economy offset the goods deficit, with non-IT net exports tracking a growth of over 55%, that's estimated in FY24. Now, this growth, or at least some of it, is also expected to spill on to the next fiscal year. So overall, the sense that we're getting is that current account fundamentals continue to strengthen and stay steady for FY25 as well, with economists expecting the current account deficit to track about roughly a range of 1% for FY25. This, along with a spike in foreign exchange reserves to a record high of about $640 billion that we saw last week, reinforces India's improving external metrics. Well, moving on, the electric mobility unit of Tata Motors and HPCL have entered into a partnership to set up EV charging stations across India. As part of a memorandum of understanding, the two companies will set up public charging stations at locations frequented by electric car owners. The collab will leverage HPCL's fuel station network. Moving on, the Ministry of External Affairs takes a strong stand against the US State Department spokesperson with regards to their remarks on the Delhi CM Arvind Kejriwal. The MEA goes on to say that we take strong objections to the remarks of the spokesperson of the US State Department about certain legal proceedings in India. In diplomacy, states are expected to be respectful of the sovereignty and internal affairs of others. This responsibility is even more so in case of fellow democracies. It could otherwise end up setting unhealthy precedents. India's legal processes are based on an independent judiciary which is committed to objective and timely outcomes. Casting aspersions on that is unwarranted. That's essentially what the MEA had to say in its statement. With that, it's time to move on to something lighter. Check what's trending on social media. The Hurun Rich List 2024 has been creating quite a buzz online, and as per the list, India has added more billionaires to the list than China. My colleague Drashika joins us to share more details about the report. Drashika?
Hi Pallavi. Yes, so Mumbai is now Asia's billionaire capital as India adds more new billionaires than China according to Hurun Global Rich List. India added 94 new billionaires in 2023 whereas China added 55 billionaires. India now ranks third globally with 271 billionaires. The most number of these billionaires were from pharmaceutical, automobile and auto components and chemical industry. According to the data, the collective wealth of Indian billionaires amount to $1 trillion or 7% of total wealth, emphasizing the nation's substantial economic influence. Tesla CEO Elon Musk reclaimed the title of richest person, followed by Jeff Bezos and Bernard Arnault. Talking about India, Mukesh Ambani is in the 10th position and Gautam Adani is in the 15th position. Now, despite a decline in China's number, the country still retained its position as world leader with 814 billionaires, followed by USA and India. Other nations with maximum number of billionaires are UK, Germany, Switzerland, Russia, Italy, France and Brazil.
Thank you so much for that, Drashika. That's all we had on this edition of The Reporter, but stay tuned to NDTV Profit for more news and updates.